one final one, and this should get me excited. CoreShares Top 50, code C Top 50. That's the code CTOPFO, not FO, 50. 50, yes. Getting lost here, man. Tracking the top 50 stocks on the JSE. And Grindrod, as I mentioned earlier, is the organization, Grindrod Bank, which has created the CoreShares group of funds. So value in issue is low. It's only about 50 million rand, but that's because it's new.
Yes.
Is there a significant difference? I mean, surely if you add a few extra 10 stocks, it's not going to make like a hell of a huge difference.
So that's one difference, but that's not the main difference. The main difference is that it's capped. So no individual stock can have more than 10% in this index, in this ETF. So look at our normal top 40 where we've got a lot, big exposure into SAB or Naspers, and you've got Billiton in there and so on. You go to the Swix 40, Naspers virtually 20% of that. You go to the CoreShares Top 50 and the biggest exposure is capped at 10%. So it's the same basic sort of exposure, but what I like about it is slightly less of those mega caps and a little bit more of the smaller companies still in the top 50. So these are not small caps we're talking about, but it is some of your more medium cap exposure that gets a little bit more.
And it should just be mentioned for those amongst us who think these ETF, I mean, you'd be surprised how few active fund managers are able to do better than this.
Well, S&P actually produces research globally every year, and the latest report that just came out again sort of showed that over the long term, anything between 80 and 85% of your actively managed funds cannot outperform such a broad-based domestic market index, such as the top 50.
And rising. They stick too long to what's not doing well. They put their own macro overlay onto the portfolios, and they want to be out when things are bad, and then they want to get in when it's rising.
And the cost of the churn, that's something people often underestimate, is even when you make the right decisions, actually investing and making those changes is causing a lot of damage in terms of overall portfolio performance.
Okay, we're out of time. So in broad outline though, you would buy this and be hot on it if you thought that the market was likely to rise, and by the market I mean sort of everything. So
exactly, but for me also this is like the basic first ETF that you buy, is to get
the
your
one that goes just on top of the mattress.
No, actually that's like the pea under the mattress. But this is really the one that's going to be your broad-based domestic equity market exposure. If you're only going to buy one ETF, this would be the one that I'd buy.
Excellent. Great. Well, there you go. So you're hot on that one.
I'm hot on this one.
I'll say I'm hot on that one too, because I like the outlook for the market as usual.